All right, we're back. I got Peter Granich here with me again today. We got one day before Father's Day. So I am happy that he decided to take on this interview because the Federal Reserve decided to skip or pause. Now they have new terminology. They always come up with something new, like the word transitory or now skip or pause. What is your take on this, Peter? I'm going to start off with the Fed Reserve right away.
Well, first, it's good to be back with you. Second, I'm assuming all those Black Angus in the back of us there, you? I can't quite tell.
Yeah, one of them is me. Almost looks like me.
No,
Yeah,
I,
yeah, Black
I get
Angus.
to I
That's
get to
right.
be yeah, I get to be around them when I visit my wife's farm in Ireland, but it's good to see them. Well, listen, the Federal Reserve, my personal opinion would have been tighten and then say the same thing they said, because they would have looked more thorough in their claim that they've made over the last 6 months. But nevertheless, they did what they did. Uh, they really going to need the next few economics report between now and their next meeting to demonstrate that we're actually slowing down. Because if for any reason there's a pickup, the conversation will come, oh God, they did it again. They moved too early. None of us know what that's going to be, but that would be the speculation. I do think we need to pause for a second and think about how wrong they've been for the last couple of years. First, my friend, they drove interest rates down to a level that really killed fixed income and really destroyed people who try to survive using fixed income. Then, on the spur of the moment, things turned around and they said, well, inflation's only transitory. And here's one guarantee I can give you besides death and taxes. You'll never hear a Federal Reserve person use the word transitory again. That is totally banned within the Federal Reserve.
I
It's
agree
it's a word that
100%.
they're
Oh,
going to learn to eat that word for years or decades to come. But then after they realized they were behind the curve, they went and started to tighten for real without thinking. Are they telling me that they didn't realize that so many banks would have such paper losses on the bonds that they knew that they were buying? Where was all the thinking in all this? And of course, let's not forget that the current Treasury Secretary, who was the last Federal Reserve head, said there would never be another financial crisis again in her lifetime. Maybe she thought she was going to die and she decided to live a lot longer. But the bottom line is, I think we give too much credit and too much assumption that the Federal Reserve is all knowing, all telling, and whatever they do, it's going to be okay.
got it. Yeah, I agree with all those points. There is one area that I was pretty wrong, which was the timing of all this, and I'll try to explain what I mean by that. If you remember when Trump was in office, I believe it was late 2018, like around Christmas, when the Fed tried to hike finally after we've been at zero. They just went 25 basis points. And we dropped with all indices about 20 something percent. And I thought for sure this time when they started hiking, and I go on record, I was completely wrong. They were able to hike. I don't know how many times exactly, but now it's been over a year until this recent pause this month. So when it comes to precious metals equities, this really kind of, I believe, when it comes to timing, getting into these miners, whether it's royalty companies or whatever, right? I believe that had a lot to do with gold not liking higher interest rates, even though we know that the real rate is when we look at the real rate of inflation and compared to the benchmark 10-year yield is still basically negative. Even if we use their metric, we're still in the negative. So what are your thoughts on that? Are you caught off guard a little bit too that they were able to raise for this long without the whole system collapsing, or you believe there is a lag effect right now, which I believe it takes about a year? That's why we've seen the crisis in the banking system and everything. What are your thoughts on that?
Well, first of all, let me welcome you to the I Was Wrong Club. I've been a member of that for multi decades, and being wrong is part of being an investor. The comment that I would say to you also is regarding timing. There was a great newsletter writer around for a lot of years, one of the more colorful that ever existed. His name was James Dines. And he used to say about timing, think of the poor man that invented preparation G. And of course, we all know it was preparation H that made it.
Yeah.
So again, not to give excuses to what you're entitled to be, but what you chose to be was more likely too early than too late. So that's always the worst thing, to have been too late. I think we all are somewhat surprised, especially the group that's been calling for these, 40, 50% further decline in the stock market, disaster, a hard recession. We've been somewhat surprised, those people, as well as some of us who may not be as bearish as them, but certainly wasn't looking for, new highs anytime soon. But I think a lot of it has to do with perception. And one of the things that's been very poor, I'm quite really distasteful, is that for 14 straight months, the Bureau of Labor Statistics has been able to fool everybody. Because let's understand one thing, economists are wrong at times, but economists, not all of them could be wrong all the time, which they've been, because they build their models on assumptions of certain data parameters. And we've now learned that the BLM has basically redone their parameters and basically artificially fixed the game. And they made employment look a lot better than it really is. And you only have to compare it to another survey that comes out at that same time that people don't pay attention to, and that's the household survey, which to me is a more honorable survey. So I think one of the things over the coming months we'll see is that the economy wasn't as strong as it will be, as it was, and it will weaken more than maybe people still think at this time, but not to this deep, dark recession that people talk about, which will actually play into the hands of the Fed right now by pausing at this point in time. So they may look to be right, but I think they're going to be right by accident, not on purpose.
Got it. So do you think now on record, is this pause just basically we're going to go back to cutting rates soon? Or do you think they're going to try to keep it at pause? Or do they actually hike again come July and going forward in 2023?
I don't see any way to ease other than something of a catastrophe economically, politically. There's just no reason to suddenly just turn the boat and ease. I do think, if I'm correct, particularly as the last couple of unemployment claims have started to really demonstrate more what the unemployment situation is, that they could pause for a while. They could pause at least through the summer and get a chance to see if inflation come down, because there's another bad potential, people like to call them black swans, and that is what is going to happen with the commercial real estate loans, particularly the couple of $1 trillion that's coming due over the next 12 months. We're seeing a lot of bad news coming out of commercial real estate now from several cities, not just San Francisco and all. And we're even seeing BlackRock having problems paying the dividend on a real estate investment trust. That is the next economic potential black swan. I don't even think they have a good idea yet what that's going to be like. So to me, I think that for the next 12 weeks, the most likely scenario is they don't do anything. But, I think we'll be borne out as we get later into the summer that the employment numbers that were coming out over this first half of the year were way overstated. But by the time they get restated, people won't care at that point. And that's been in their favor to do something like that.
I see. Okay, so I'm going to still continue on kind of sticking with the same topic here. So when it comes to miners, right, precious metals, equities, do you believe because of this pause that could last for several weeks, several months, do you believe that those same plays in the equities might be kind of just going sideways? And you think there is going to be a rocket move when finally something does officially break, when they can't paint it over anymore, and we go back to easing? Basically, to make the question very simple, do you think that the miners go straight up when they start easing again?
Well, I wrote a report in the last week called Junior Resource Stocks, Goodbye or Goodbye. And when I look
On
at my
Palisades
portfolio
Radio?
lately,
Was that,
I'm
sorry,
sorry?
was that interview on Palisades Radio just recently?
No, it's a writing of mine, a
Okay.
video of mine, and a blog post of mine called Junior Resource Stocks, Goodbye or Goodbye. And when
Yeah.
I look at my portfolio, I think it may be goodbye, because not only have they gone down far more than I would imagine, if we would have had this conversation 3 months ago or even 6 months ago, I would have told you the bottom is in on the junior resource stocks. And that hasn't been the case. But it's finally seeing widespread capitulation, seeing shareholders just express the anger. And I'm used to getting nasty emails, those things don't surprise me, but I can see the talk among chatter, among where those type of investors play, and all those signs, even people in the mining industry. And of course, the people who comment on them full time, they always seem to suffer this amnesia of what they had said a year or two ago. I won't. I know what I've said. And what's more important to me, God knows what I've said. But I do think, and that's why I don't want to talk about rocket ships, I do think from a valuation standpoint, we've either missed the boat, somehow they rang a bell and ended that industry and we didn't hear it, or we're at 5 or 10% of what will be an ultimate bottom and a double or triple when they turn around sometime in the future. But I actually hope it's not a rocket ship, because if I think they went up too far too fast, they would naturally pull back and everybody go, oh, there it is again, failure. But I think it will come in conjunction when gold makes a new all-time high. We have, if you may, let me just expand on this. We've seen, I've been in and around the junior resource market for almost 40 years. I missed 5 years from 2014 to about 2019. I didn't participate really at all. But it's much more difficult industry right now than it was 10 or 20 years ago. First of all, the junior mining companies have a far biggest challenge to enhance shareholder value through marketing. There are really very few individual financial advisors that still build a book of business around individual stocks, charging full commissions, and then also be specializing in resources. Where 10 or 20 years ago, there were 100 or 200 of them at every gold show I ever went to, and there were 1,000 yet all scattered around North America. So that getting that person involved in your company also got their 100 to 500 clients involved. That's gone. That's a big stick taken away from the marketing side. Now, even if all those people still exist and will play in the market, the junior company has to meet them in another forum or more on a one-to-one basis. The other thing is regulatory. Here in the States, man, if there still is a full service broker doing that, unless the stock trades on a major stock exchange like the New York or the NASDAQ, they won't even allow them to take an unsolicited order. Some of the discount brokers won't even take Canadian listed stocks, even if they have an OTC symbol down here. And then, of course, the general malaise that we've seen, even though metals are at a substantial high, they've been basically moving sideways. Gold has really been in a very long trading range for almost 3 years. And so all of that, plus, and this is where junior resource players make an error, if you don't mind, and I once made it too, so I don't walk on water. And that is, we think somehow bad general equity markets, bad news, world's exploding and all, somehow propels junior resource stocks. This doesn't happen. Someone doesn't have losses in NASDAQ stocks, losses in bonds, business is bad, but let me buy a junior resource stock. That's not the mentality that's going to happen. So we've had, until recently, a bad market. We had struggles in the economy. We had interest rates going up. Those things also played against the junior market, plus the crypto market. That took a lot of money that would if it didn't exist, some of that money would have found itself into the junior market. Instead, it went into the crypto market, and a lot of that went to money heaven. You cannot believe how many of those companies that existed a year or two have just blown up. Yeah, you can keep looking at Bitcoin, and of course it's way down from its highs, but at least it's still around. A lot of others can't say that. And that is money that some of it would have found its way into the junior market. So it's much more challenging to be a junior resource company now, in my opinion, than it was any other time in my 40 years. And it's going to take metals moving to the front page of the financial news. And I've said this to you, and I've said this to a lot of people. Gold is treated like kryptonite among the financial service industry in the United States. They just don't speak about it. They don't want to speak about it for two reasons. One, they can't make money on the physical. Once they sell it, that's it. They can't turn that around. And two, it flies in the face of what they do make their living in, stocks and bonds. So it's going to take gold being back at the new high, generally being spoken to regular investors who may never hear it, and then have that work its way down to the junior resource level. Until then, I think it's going to remain a challenge. Doesn't mean they can't go up, but there's not going to be any rocket ships. I think it's a bad mistake to look for rocket ship type of moves in the junior resource market, even in uranium. And that is a market that's held up much better. I personally, thankfully, have done much better in it. But even there, we don't want rocket ships. We just want slow and steady and let the turtle win the race.
Let the turtle win the race. So going back to your 40 years experience, for the most part, if you agree, if you look in history, you can kind of see where the future is going to show us, right? You can kind of like paint the picture a lot of times just looking into history. And these precious metals bull markets are very rare, but when they do occur, they last a long time. So going back, and Rick Rule also explained this in one or two of the videos I watched a while back. He was talking about where we're looking at about 2 years on one of the last bull markets is where it was basically just, I won't even call it consolidation. It was more of just a plunge with the precious metals equities. But it took 2 years for them to recover. Right now we are looking at, if I'm correct, of August of 2020, is where gold peaked. All these miners that I still have some, they were way higher back then. And now we are approaching to what I call 3-year anniversary before we're looking at now, like I said, way longer than 2 years of consolidation. So is there a chance, and based on what you were saying, you do believe 5 to 10% correction is possible, and then you are just hoping for a slow ladder going up, or you would just stay away from juniors right now and stick more with seniors when it comes to
I think majors and seniors who are in much better shape at this point in the cycle than they've ever been since I've been involved in them. Normally, once gold is off its lows, and let's not forget it, it's substantially off its lows. It's done quite well. It's just not too long ago, it was in the 1600s, and now we're trading, 1950 to 2000. Usually in the past, by then, majors have taken on a lot of debt. They paid big prices to merge and make acquisitions. That is not the case. They probably have the best free cash flow I've ever seen them have as a group. For them, this is really Christmas in June and July. I think we're going to see them really start to do some serious acquisitions. We've already seen it start because the juniors, even the emerging producers, are so relatively cheap to the underlying metals right now, and they're not going to look for organic growth. They're going to acquire their growth, the majors. So I suspect that's going to help the market. I do think the challenge is in the juniors that are trading on fumes. These are the companies that have a lot of shares outstanding, are selling for just literally pennies for share. And at this point, they're going to have to merge or reconsolidate and, see kind of reverse splits and, and maybe get some financings based on those reverse splits. I think it's Rick Rule that might have said this. It's been quite a while. I used to appear at all the same shows around the world with him for a lot of years. And he may be the author of this comment, or it may have been somebody else. But not too long ago, he or someone else said, if there's 1,100 juniors, it'd be best that 800 of them disappear and let the 300 that really have everything going for them be the market. We would have that much more interest and not have money go to dead companies. And to some extent, that's true. There's a lot of companies out there that are really on fumes, and there's still some that really are just retirement plans for these one or two managers that run them, do enough work to raise financing, go through the motion, not succeed, and do it all over again. But I do think, and again, I'm very biased in this. I not only is my portfolio made up a lot of juniors, but I've even taken on some now that sponsor a blog so I can do my work. But I do think it's a tougher play than it's ever been, but it's probably in the most undervalued situation, even compared to when in the late 1999, when gold broke under 300, there was a feeling back then that the junior resource market had ended. How's it going to operate? Everybody needed 350 or 400 gold back then, and it didn't. And I think we'll be saying the same thing about this point a year or two from now.
Yep. I'm myself, I'm a smaller player in the juniors. I prefer more royalty companies and seniors, especially dividend paying ones. Yeah, I was looking at it. I try not to look at my portfolio too many times a week for the juniors, because when I look and I compare it to that August of 2020, some of them are down 70%. And I do believe they're coming back at some point, but I haven't sold any of those. I'm just holding the bag and just waiting to see what happens. I don't break a sweat about it on those, but I'm definitely not buying any, even at these prices right now, because I am more worried about what you just explained.
Well, let me just say, you made a very good point. I recently took on a company that I've watched for a while, and I think is a better choice for the less risky a person that doesn't want to take risk. And that's the royalty companies. Metalia Royalty and Streaming became a client. And I think the royalty companies now, who've come down with the metal prices, but have a lot of good projects in their belt, probably offer more safety of principle at this point than some wild junior that's drilling one project in one country that may or may not be risky. So I congratulate you for that. And it's probably a safer bet right now if you're looking major mining companies, then royalty companies, and then work down the food chain to the juniors.
Yep. And for me, number one it has been, and I mentioned that on my video blog for a while, and me and you touched up on it last time. I've been telling people not what to do. I'm just saying what I'm doing and why, and how I'm trying to make sense out of this nonsense. And I was looking at taking profits every chance I get. If I would get to 10% pretty quickly, I would take profits out, trading and buying real things with. And I was saying that the 70% would be in physical, working on 80%. But I have not gotten to 80% to being physical in just the precious metals portfolio, because I am stuck holding bags. So I can't take profits out because that's where I'm at. But once that goes back up, I'm going to take it out and be overly weighted in the physical, as most other people were saying back in the day, 3-4 years ago, when I started talking about it, that's kind of ridiculous. You want to be in the miners. And like, you know better than most people that tune into these channels, because you have so much experience, if you hit these juniors, you could do pretty well, but it's so risky, and now seems a lot riskier for sure. And going back on that comment, what you said, I think that might have been Doug Casey or Rick Rule that said that. That sounds like Doug Casey comment. Either Peter Granage, Doug Casey, or Rick Rule. Now pick your legend out of the three. The way I see it. So yeah, that's for me. But like I said,
let me just declare this. I don't know about them viewing themselves as legend, but I've learned, especially in the juniors, that I end up putting my pant legs on one leg at a time, just like everybody else. If you learn one thing in junior resource investing, hopefully learn how to spell the word humble by the time it's all done, because they will humble you.
Wow, what a way to end this. I'm hoping a lot of people take a lot from this this video today, a day before Father's Day. So I just want to wish you happy Father's Day, Peter, and all the listeners, all the dads out there. We're living crazy times. Fathers have been under attack for a long time, and I hope we can make some changes soon. Wake people up with what's going on, and see what happens. It's really getting crazy out there. I'm sure you know all about it. So happy Father's Day to you, Peter.
Sure, and I wish to wish all your viewers and mine that will watch this a most blessed, happy Father's Day. And for me and those that choose to believe, all of our thankful and gratefulness comes from our Father in heaven. And for him, I'm most grateful for the life that he's given us all.
Amen to that. How many children you have? Last question, if you don't mind answering.
I have one daughter. She was a miracle child. She was during my wife's pregnancy. The doctors felt she had spinal bifida, but my wife believed in the healing. We went to a healing mass, and when the child was born, the Jewish delivering doctor, who was also a regular doctor, said, "It's time for me to read the second half of the book, because I saw the MRI. I saw where we thought a hole was going to be in the baby, and there's no hole there." So we have a miracle child, a true miracle child, and we're grateful for that. And I just tell people, and I've said this today, if you don't mind me sharing this on my own
Go ahead.
Twitter page, that there's only two types of people in the world: those who are a mess and know it, and those who are a mess and don't know it or don't want to know it. And the blessing is to know we're all a mess. And thankfully, we have somebody that knows that, but gives us life anyway. So thank you again for being your guest, and you're always welcome, no matter what holiday it is, to reach out to me. I enjoy speaking with you. And by the way, I very much enjoyed ordering from your farm, and we had lovely meats, and I hope to do it again soon.
Thank you. And I got 2 boys and 2 girls, beyond blessed. And again, happy Father's Day to all fathers out there. And Peter, we will talk again. Thank you. Where can people find you before I finish recording?
Well, when I come from under my desk when watching the Junior Resource Stocks, I can find me on my Twitter page, Peter. I have a YouTube page, and I have a website, petergranich.com.
Well, thank you again, and we will talk soon. Appreciate it.
God bless.
God bless.